Good morning. Great to see some familiar faces. Those of you that I haven't met before, I joined Ares in 2021 as part of the acquisition of Black Creek Group. Prior to that, in building that distribution channel, I was at Morgan Stanley for 25 years in various roles, including, among other things, I was responsible for all the investment products and research in the wealth channel. I share that because it forms just how excited I am, not only about being at Ares, but being at the intersection of alternatives and wealth management. As Mike outlined, it's a secular trend, and I've been in financial services long enough to know that you don't always get to be at the forefront of some really powerful tailwinds and a firm with an incredibly great culture. So I want to focus on really three key themes. They're quite simple. You're going to hear them come out throughout the conversation. The first is we're in the early innings of these secular tailwinds. Not only is the firm doing well, but the opportunity will grow in the wealth channel for alternatives. The second theme is, and it's an important one, there's a competitive moat around what I believe are 5 or 6 firms around the industry that will lead to 5 or 6 firms being the winners. People, products, a track record, they're all critical to be successful. And then the third key theme is economies of scale are starting to emerge. We've made a significant investment. We'll continue to invest, but our fundraising results will far outpace our future investment. So I mentioned the opportunity. The future is bright, and the growth of the pie and the allocation to it is quite clear to me and others in our industry. Because of the aging population, because of the shift towards a defined contribution marketplace, you will see the pie grow from 80 trillion today to close to 100 trillion. The allocation to alternatives remains massively under any target, and there's tremendous support for that, not only from the financial advisor, but also from the banks they work for. And so you should also see the allocation grow materially in the coming years. So as I said, the future is incredibly bright. I'm very proud of the last 3 years. We've been busy. Our future will also be something I'll get to, but let me just step back and talk about where we've come from. It was only 3 years ago we had one product to offer perpetually, and that was targeted to the retail client. It was only a few years ago we didn't have the scale and the footprint to service these products and to distribute them in a highly fragmented channel. It was only 3 years ago that we were 12th ranked. Today we're 4th. Only 3 years ago we had a 2% share. Today we have an 8% share. The results are clear. Our AUM has grown to approximately $25 billion, excluding ARCC, which, as you know, is largely held in the retail channel. And our management fees are paid day one, which is an important ballast to the financial results of the firm. Our strategy is quite simple. In this industry today, you need to have a global brand, a 20-year track record, relationships. Ares has all of those today. We leverage them every day in the retail channel. You need products that are targeted for the investor. These strategies allow you to work with large distribution platforms each day. We are one of the few firms, the only firm today in, we believe, I have to remember my Carl Drake qualifiers. We believe we're the only firm today that has 6 semi-liquid strategies all over $1 billion. The 6th will be $1 billion by June 1st. That's unique and important because diversity of offerings is crucial. We work with over 50 partners globally. They know Ares, they like to partner with us, and those partnerships are critical to our strategy. We think about all parts of the retail channel and have the resources to execute with wirehouses, RIAs, family offices, private banks. And then we're focused on thought leadership. We're focused on education, and we use data where we can to make this channel less fragmented. We're trying to drive demand to our sales team, and it's key to our strategy going forward. As I mentioned, we're pleased with our results, but it's just the beginning. We've taken our quarterly flows to 2-3 times what they were just 3 years ago. We've broadened our product suite, and we've grown globally. Over a quarter of the flows recently have come from Europe and Asia, where we've built out teams and will continue to invest. And as you can see, we've steadily added strategies that give us one of the most diverse and complete offerings in the industry. After product development, you need to broaden your partnerships. As I mentioned, we work with about 50 firms globally, but there are 7 or 8 that represent over $1 trillion in client assets that help you anchor a product. CADEX was an offering that we worked on from 2018 to 2021, and quickly were able to put together 3 of the leading platforms to offer the product. While there have been headwinds for real estate strategies, we have still put together 3 new partners for our non-traded REITs, importantly during this period. And we raised over $2.25 billion for ASIF, APMF, and ESIF, really with just the support of one key anchor. The future is incredibly bright as we grow our partnerships. It's also an exciting time because our penetration will grow. We have yet to do business with 95% of our addressable market. In fact, 90% of our business, 90% of the advisors we work with have only done one product with us. With our diversity of offerings, with our strategy to be product agnostic, all of that will change. It's not enough in today's retail channel to simply have products. They need to be differentiated, and they need to span the full spectrum of core to opportunistic, open-ended and closed-ended. And in each asset class, you need to be a leader. You need to have something to win across the many offerings. No doubt you're well aware, our credit platform is highly differentiated. Again, I'm reminded about the things I'm not supposed to say, but we might have the number 1 platform as the retail channel thinks about our credit group. And we can offer strategies in different form, and that's quite crucial. I believe that in private equity over time, secondaries will be the preferred method of investment. The level of diversification without sacrificing return is actually a remarkable and very relevant for the individual investor. As I said last night over cocktails, my personal experience investing poorly in vintages would have been certainly much better had I had the opportunity for the secondary strategy across the different private equity opportunities. And then in real estate, tax is a key differentiator. Everyone has seen how we grew the REITs with the ability to offer a 1031 solution side by side. It allows you to bring net new assets into an advisor's book, offer a tax solution, and create really sticky shareholder base, which the latter was quite useful to us in the last couple of years. In the 1031 exchange market, we have an 18% share. The next closest competitor has a 9% share. So as you go across, working backwards, we are differentiated in real estate. We are differentiated in private equity with the only pure play secondary strategy. And of course, we have the preeminent credit platform. As I mentioned up front, economies of scale are emerging. We will still invest. Europe and Asia are key areas for that growth. However, this is a scalable platform today. Our fundraising should double, while the CAGR for our investment will grow at roughly 10%. this still is a highly fragmented channel. It's a big part of why I say there's a competitive moat. It's key to why we are thinking about how to drive the financial advisor and their clients to our team. Core to that strategy is AccessAres. Core to that is leveraging content that we already have, leadership that we already have, that can use our platform to reach the audience much more efficiently. So let me just end with where I started. This is an exciting opportunity. There's a true competitive moat, and economies of scale are emerging. If you just think about where we will be or what our goals are, we certainly have a product suite that is quite diverse and amongst the leaders in the industry. I mentioned the 6th of our new semi-liquid strategies will cross $1 billion on June 1st. It's not just one thing to have a product, but you need to get to that first $1 billion. It's the most crucial start you need for any fund. Our team will continue to grow. Our rank should improve to the top 2 or 3. And that rank in wealth management is really the equivalent of number 1, I believe. The financial advisor offers 2 to 3 solutions when they pitch a strategy. And as long as you're in the top 3, you're going to be one of the leaders and winners. And then a much debated AUM target of $100 billion. We have clear line of sight to that. We feel really comfortable that with our solutions in place, with our team, and with all of our capabilities, the associated management fees as well from day one will be a big part of our future. So I just want to thank everyone for giving me the time to be with you. I've been here 3 years. I feel like I've been at Ares 30 years. I'm going to introduce my partners who lead our global credit group, and I look forward to seeing you again in the near future. So thank you very much.